Well, good afternoon. This is Mr. Not Advice. It is July 20th, 2026, Monday. This is my end of the day update. As always, this is for entertainment and education purposes only. So today's market was only like a microcosm of what the market's been over the last couple months, quite frankly. A mess, right? Market continues to key off of headline news out of the Middle East. Trump continues to jawbone the market higher or at least stop the bleeding. At the same time, the market is balancing, trying to trade on the micro of companies as they get ready to report or have reported earnings to get a gauge of the overall health of the US economy. But that will be greatly affected on a go forward basis by how long the Iran war lasts. So there's a lot of moving parts. And I would say, and I made this comment to my members and on Twitter that this market in my 33 years, I have never traded in an environment like this. The primary difference is Trump, is the fact that we have an administration that is incredibly keyed on the overall stock market at this moment and its performance and simply won't allow it to go down. So, of course, this morning, 2.5 hours before the open, we had Marco Rubio coming out that saying that Iran wants to talk. I mean, it's getting ridiculous. But this is the environment we're in. I mean, I could sit here all day and every day and bitch about it, and I do. But I still need to trade. More important, I still need to stick to my plan. My plan is very simple: protect capital. And right now, the let's look at it this way: the current data that's incoming, the market environment that we're in, is outside of what made me successful for 28 years. Remember, the first 5 years of my trading, I tried everything and it didn't work until I was finally mentored into the type of trading I do now. But let's take a look at the overall market. So pretty quiet macro week. So in terms of economic data points that will come out this week, is it's pretty quiet. Investors are bracing for, as I said, the micro, which are the mega cap earnings this week. After OPEX now, uh, markets are freer to move today. And we also had Bitcoin bouncing alongside big tech. Bond yields jumped even though oil prices were well off their highs. Now, bond yields and or interest rates typically move in correlation to strong correlation with oil prices. It is not surprising to see yields rising as oil continues to rise. But today was just really sort of a messy day in the market. We had the ninth consecutive day of bombing in Iran, which pushed oil prices overnight. But then, of course, there were, this release by Oman or Axios that now what the target is to get a 10-day ceasefire to do talks to lead to a 30-day ceasefire. But on the back of that, then you had the Houthis, who are backed by Iran, announcing that there's a navigation ban on the ocean for particularly Saudi Arabia. Why? Because Saudi Arabia has been shipping a lot of oil via the Red Sea from a cross country pipeline. So now we're going to go after Saudi Arabia. The past several days of attacks in the strait have really caused the traffic to trickle down to single ships, and that's restricted oil and liquefied natural gas shipments. This is going to continue until we get to the point where either they're back at the table or Trump just finally says he's had enough and bombs the shit out of them, which I thought happened last week and during the weekend, but the market certainly didn't react to it. One of the most challenging environments that we're in is still the market's trading well within single digits of all time highs, but it's the day to day volatility of the market that's making it very difficult for anything to trend with strength. The market right now, there's a cap on the oil going up because US cares about the stock markets, and our administration cares about the stock markets. As I made the case for in my weekend update, and I've been making it now for a couple of weeks, crack spreads, the difference between the price of oil and refined products continues to blow out to record highs. The risk is not in crude. The risk is in refined products. And look at what's going on in refined products from jet fuel to gasoline to diesel. Okay. On the back of that, we've got European natural gas prices are now pushing to all time or conflict highs, as well as heating oil. And Europe right now is faces a very tight window to replenish their inventories before winter starts. Furthermore, the Russia Ukraine conflict continues to choke refined distillate supplies. If geopolitical tensions escalate any further, Russia could squeeze Europe again via restricting natural gas flows. Remember, for as much as Europe wants to destroy Russia, they're buying natural gas from them. The one difference, or the one slight difference in the market, is that stocks are tracking oil's move while bonds are actually tracking refined products moves. Throughout the day today, we saw a downdraft in the fastest moving stocks. That's been the latest trend in the market, obviously including the stocks, the semiconductor index. But that took a pause today. Late in the day, we had oil spiking, and that dragged all the major indices lower. And that was amid heavy put buying by zero TDE traders. By the close, the Nasdaq had tumbled to barely unchanged, and the rest of the majors were sold today. The S&P 500 joined the Nasdaq now below the 50-day moving average. For me to get aggressively long, I'm going to need to see two things. I'm going to need to see a cessation or a lessening of the bad news or the conflict news out of the Middle East, which is only going to occur if the US and Iran get back to the table. I'm also going to need to see these indices move back above their 50-day moving average. The Mag 7 today outperformed the S&P 493 as breadth remained extremely narrow. Semis did rally today back on the back of the new Kimi LLM model. And there were reports that they were running out. Kimi has run out of compute capacity, and it did, in fact, cut off new user signups. But that rally wasn't even sustained as we sold off later in the day. Looking forward, we've got, one final comment. As a result of dealer gamma after July options, positive dealer gamma is gone. So that leaves the S&P less pinned. This is according to Bloomberg macro strategist Michael Ball, and that could give any momentum rally a greater scope to pull the market higher. Weakness in semis and other crowded AI names has pushed high beta momentum into one of its fastest and deepest drawdowns on record. But the size of the recent drawdown and, more importantly, recent negative positioning indicates there's a risk of a squeeze higher, which happened on Friday as a reversion to the mean trade occurs. Positive dealer gamma, as I said, declined after July's expiration, leaving the S&P closer to where we're sort of almost like in a neutral gamma position. If we get the negative gamma, reinforcing moves rather than suppressing those moves. Goldman Sachs made a comment today that we are probably late in the later innings of the move, given the fact that the magnitude relative to history was record breaking. We have cleaner dealer positioning, and we have an absence of a clear fundamental catalyst. Although AI CapEx, which we're going to find out this week with some of these reports, is weighing on the entire AI and memory trade. There is a risk, Goldman says, of a deeper drawdown if CapEx disappoints. And I repeat myself, how ridiculous this is. So what the market is looking for is an affirmation by the hyperscalers, as you see on my screen, for them and the cloud providers to reaffirm that they are going to continue to spend money, right? At the same time, while we know that credit default swaps are rising, uh, the cost to insure against default of this debt. So the market is looking for these companies to become even more irresponsible because it's just going to continue to destroy their cash flow. In order for stocks to rebound materially, we're going to need solid earnings this week from key tech names. Take a look at the volatility structure for the next week with earnings coming out of Google, Tesla, Intel, Amazon, Microsoft. This is, and the next 2 weeks, this is what's probably going to push the market around. And it is for the temporary for 2 to 3 weeks out or this week, there is a binary trade opportunity, which is if the markets or if these hyperscalers and neo cloud providers, if they come out and they say they're going to continue to do capex spending or increase capex spending, the market's probably going to rally. I do think that there is an opportunity for reversion to the mean trade, and I'll putting out to the members a short term trade idea just to play this for the end of the week. Right now, we've got a situation where oil is being held down because, and I'm sure it's through the paper market, through the U.S. government and its allies are helping suppress the price of oil. I know in Asia, I saw a number that oil was now being priced above $90 a barrel. But right now, the big loser relative to the price of oil is China. Remember, this week we're going to have nearly 20% of the S&P market cap going to be report their earnings, and that includes Google. Dealers are positioning themselves with a pair trade in the QQQ by buying puts and by buying calls, all short term. Something I will put out into for my Discord members as a free trade idea. Looking at the overall market, like I said, it really was a do nothing market today. The strongest thing today was Bitcoin. It did tap the high. This you can see right here previously on 622 and then 715. This is a bullish trend, in my opinion, a bullish trend within a longer term consolidation. Will that continue? I think a lot of that is also going to be dependent upon how these Microsofts and the Googles, what their capex plans are as they report earnings. I don't see them meaningfully shrinking. I don't think we're there yet. But I think if the first time you hear a hyperscaler or you hear a new cloud provider announce that they are going to cut back on capex, I think that is going to could cause a massive drawdown in the equity market, especially the Qs. On days like this, the best thing to do is to sit on your hands and do absolutely nothing because there's no trades. At least for somebody like me that trades technical setups, you know, is now a good time to be nibbling at stocks that you may want to own for the long term? Well, you may think it is until you drill out. Here's Micron. You can say, well, I can buy Micron at 865 when it was recently at 1255. Right. Until you drill out to the monthly chart. Okay. And you see that it really hasn't been that much of a pullback. I'm not ready to step into those. And again, I've got the major overhang, which is Trump and all his stupid tweets. When the market does break free of this, and it will, I will be looking at NVIDIA. This is your monthly chart of NVIDIA. It's held up extremely well. I'll be looking at IGV, which is the software as a service. Okay. I'll be looking at DRAM, which is the microchip ETF. I'm creating a list of stocks that I want to own. EOSE was really a yawner today because it is the last day of the rights offering. So I have my buy target up here. And unless we make a new low relative to Fridays, this is going to be my buy target. I need to close above 471. Once, and if I get that, I will go long on a swing trade and pair that with a 2028 leap trade. I had no new trades today. I'm sitting on my hands. I'm protecting capital. It's immensely boring. It's immensely frustrating. But my first rule trading is protect capital. And so this is a great practice for me to continue to do that. I do not know when the market's going to be able to trade like it did in June, which was somewhat free of what's going on in the Middle East. Probably when they get back to the table. Okay. Who knows when that's going to happen? First thing that's got to happen, and this was originally what I called for, and before I started trading, was I need to see at least 3 days of no shooting by either side. 3 days of no shooting, and or because they may announce it, a return to the negotiating table. That will give me greater confidence that we will at least have a shot of being in a market environment where the market's not going to be whipped around by the Middle East news, and we'll be able to return to more organic price discovery. Look, one of the worst things you can do during this time is think that you are losing ground by not trading or investing, you're protecting capital. There are great times to trade and there are difficult times. I prefer to trade during the great times as I do extremely well. I believe that we will eventually enter that phase. I do believe they'll get back to the table and start talking, but for me, the first trigger point will be stop shooting at each other for 3 days. Hope you had a great day. I've got a free live session on this Wednesday talking about cover calls. That's a little bit different than probably what you're used to. I want to talk about it in the context of monetizing a current position and creating a dividend, ongoing dividend, with only a portion of a stock position. And I'll be using EOSE as an example. And then we get to see tomorrow, Wednesday, how EOSE is going to trade post rights offering. I don't think I'm happy to be, if I am wrong. I don't think there's going to be a major pop, but it remains to be seen because I don't think there's going to be a major reduction in short positioning in EOSE until such time EOSE is able to get into a sustained uptrend. But for now, it's a wait and see. And no, I'm not worried. I'm frustrated. But if I was worried, just so you remember, for those of you that are new, I used to be long Enovex and I was a fan of Enovex, but then I flipped on Enovex. And a lot of my members saved a lot of money by going out of Enovex. Okay. And so I will not allow, or let's put it this way, I will continue to monitor EOSE as objectively and analytically possible as I can, without bias, without FOMO, and without fear. Anyway, hope you have a great day, and I will talk to you tomorrow.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different.